What is going on, everybody? Welcome back to the channel. In today's video I got a special treat which I talked about on the latest video, the weekly newsletter that I was in the works of sharing a strategy that I really like, and I think it's really beginner friendly. So if you're a beginner trying to learn about the stock market, make sure you stick around for this, because we're going to be talking about some really hot stuff today. So what I'm going to be talking about is the double top and the double bottom strategy. You might be thinking, Antonio, this is very basic. It's literally like almost like in trading 101 if you've been trading for a while. And I feel like a lot of you guys are not using these strategies enough. You're not using double top, double bottom, even triple top and triple bottoms enough. So that's why I want to talk about it in today's video. Let me show you guys some facts and statistics about the strategy that you might not be aware of. Of course, if you like videos like this, if you learn more about the stock market, if you want to trade with me live every single day, make sure that you hit the links down below, join our premium Discord community. And if you want to learn more about the stock market, make sure check out the course as well. And don't forget to subscribe and like this video, of course, so I can show more of you guys the strategies and things like that. So first of all, I would like to show you guys the Samurai Trading Academy article. Not affiliated with them by any chance. I just have a really good article talking about different strategies and their success rate. As you guys can see here, the statistics on the price action patterns below were accumulated through testing of 10 years of data and over 200,000 patterns. In all these cases, the price action patterns were only included once they were considered to be complete, which means that say you have a bull flag, if the bull flag doesn't break out, it's incomplete pattern, they do not count it, which matters. Why? Because that'll be your enter trigger. You don't enter if there is no enter trigger. That's why it's important. So first of all, they have a bunch of patterns on here that you can see, but with different percents. But I'm gonna skip straight up to the double top and double bottom pattern, the triple top and the triple bottom pattern, which are pretty much almost very identical patterns. And as you guys can see, double top pattern is a 75% win rate. What? 75% of times that can be right? Can you believe that? It feels like you're always wrong in stock market. It feels like every time I buy, I'm part of the buy high and sell low gang. Well, that's why I'm going to show you guys. The double bottom actually is even higher win rate with 78.55% of the chances working out. And if you look at triple tops, triple bottom, which are variation of double top and double bottom, percent things, you can see 77.59 and 79.33, almost 80% if you find a triple bottom pattern. So now you guys see how such a basic strategy can be very influential into your trading career, and that's why you should be really keeping an eye on. I do want to point out there is a couple more here that have actually higher percent rate with the head and shoulder, reverse head and shoulder pattern, which but I don't think they are as beginner friendly as the double top and double bottom pattern. So we're gonna focus on those. And if you guys leave enough comments, I'll talk about the head and shoulder pattern as well. So I'm gonna go to my little scratch pad over here. And what is a double top pattern? For most people that don't understand, it's literally just support and resistance level. Your support and your resistance level, your S and your R, right? The double top means or sorry, I should put the R here and the S here. But let's say you have a double top, you try to break resistance, doesn't, tries again, fails, and then boom, rejected on the price action. While the double bottom down here would be like, you have a stock that's hit support once, retested that support, more buyers come in, showing that has price strength, boom, pushing it up. That's literally all this pattern is. It's literally all it is. So let's say you have this steady uptrend, and you have one top, then you have the second top. You short up here, you short position here, and boom, trends down and you make money. Well, other way, you have some downtrend or something, then you have one bottom, retest the bottom, you long here, and you make money going up. So that it's very a simple pattern, but there is ways to there's more than one way to trade it, and there is ways to make this pattern work more often than not. And there's some certain things that you want to point out, look at when you're talking about this pattern. First and foremost, I do want to talk about I don't know, I read everything. Let me fill this up. We're gonna get into some live examples as well, but I want to talk about the first thing and foremost is that this pattern works in pretty much every time frame. You can be on the 5-minute time frame, on the 1-day time frame, on the 1-hour time frame. This pattern does work in every single time frame, but you do want to pay attention. Let's say now you have you're on a daily chart, right? And on a daily chart you see something that's having a steady uptrend. Then you go intraday, you look at the 5-minute chart. Now we're pretending we're in the 5-minute chart here, and then you see this double top here, right? You see this double top, and now you're like, okay, I'm a short here. be careful that you don't think that now the trend is going to be a downtrend on the daily because there was a 5-minute double top. A 5-minute double top will mean that on a 5-minute time frame there's going to be a short-term reversal, but it doesn't mean that on the larger time frame it's going to be a short-term reversal. So keep that in mind when you're trading that. Just because you see a double top doesn't mean stock is going to go down forever. Let's say you see a double top, it can go down for the next, on a 5-minute, you can down for the next 30 minutes and then boom, back up again. So there is potential trade, but just be aware if you're trading on the 5-minute, the pattern only is valid on the 5-minute. If you're trading on 10-minute, 15 minutes, all those things are about. If you're on the daily, you see rejection on the daily, you can expect the next daily candles to be red candles. So I want you guys to be aware of that just because you see something on a smaller time frame doesn't mean it has going to happen on the larger time frame. But subconsciously, if you find it on a daily time frame, more likely it's to be on the smaller time frame. You just gotta be aware of that price action. Also, another thing I like to point out is that let's say you have an uptrend, right? And then you see this double top here, right? And then you see this double top. And you want to enter a short position here. You're saying, okay, this is double top. I want to enter a short position here. Well, where are you going to put your stop loss if you have no data here, right? Let's say you have no data here. Where are you going to put your stop loss? You can't just enter a trade and expect it to go down because this pattern could fail. So what? It's just going to go up and you're just going to stop out at a random point. That's not how we want to trade. That's not a proper plan. Well, in case of this happens, you want to see a rejection of the price. What do I mean by that? I mean that you want to see this breakthrough and then fail. So pretty much you want to see a fake out. If you have no points to determine your stop loss, you want to look for a fake out. So you see this, you might see this very often actually. You see you're probably going to trade a break of the open price, a break of the high of day, and okay, you enter and then boom, fakes you out and you come back down. That's a lot of time that's just people playing this double top pattern. You have one high of day, you see a sell off, nice retesting the high of day, boom, goes up, all the people get trapped here, fakes out, and people start shorting. When you see this fake out, that's when you want to enter the short position here. And, you can set your first profit target at the low of day, and then wherever the next support might be. But now you have a stop loss here, and you can analyze your risk to reward. Because at the end of the day, you do want to think about what is my risk to reward. If you're not risking 1 to 2, you wouldn't even take it. You wouldn't take it. Well, maybe if you have 1 to 3, you'll like to take it. Definitely, if you have a 1 to 1, please do not take that 1 to 1 risk to reward. You don't want to look for those. So I just want you to be aware of those little things that will make you more profitable when you're trading this pattern. You gotta be aware of the little things, and you also, if you're seeing a rising volume, let's say, you have your little volume bars right here, and then you finally get to this double top, you see an increasing volume, that'd be a warning sign. That might be a red flag that's like, hey, this rising volume may be that you're actually gonna get a breakout and not a double top. And also you can short after you see the rejection. My rule of thumb is always wait for the candle close to see the rejection. You can set a rejection, and on the top of that candle you can set your stop loss. So be aware of that. And I'm talking about exactly what I'm talking about. Same thing, for the double bottom or the triple bottom pattern, you just got an extra top. So let's say you have this, then it bounces on the first support, you take a partial profit, and you see a third, you can add to your short position here if you do see a triple top. So triple top, double top, they're all very similar patterns, just add an extra point or flip it upside down. So I'm gonna be talking about pretty much mostly the double top and the double bottom, but just understand that everything I talk about can literally just be inverses to the other pattern. The one is the bullish pattern, one is the bearish pattern. We should all be aware of that. Now let's go to my favorite trading website, to chart TradingView. So TradingView, I'm gonna show you guys a few examples on how this double bottom or double top pattern worked. Well, first let's look at ticker symbol NEO. What do we see here? First time we see NEO here. Let's analyze this larger double bottom pattern first. So we see that there is a bit of a downtrend. We're in the one day time frame here, so understand that. So we see here, first of all, we see you just see this so often, honestly. Like as you guys can see here, you see a triple top here. You see this uptrend makes one high around this range. And understand, a lot of times it's not going to be exact. Within like a really tight 2 to 3% range, it is still considered a double top bottom pattern. And you can see that boom, you get that first high, it gets rejected, you know, you get this wick down, and then it makes a second local high. Pretty much it's almost the same exact range as previous, and you can understand, okay, that's resistance. I can start shorting it. I can set my stop loss on the top of this wick, right? And you know, I can see that here there was my support zone, as here it bounced on it. So now look, I'm risking this much to make this much. You know, that's a good trade. You're risking here about $2.50 for potentially $9 to $10 here on this trade. And you guys can see, boom, it hits the support, hits your profit target, you take profits. And now, okay, oh, it bounced on the support, you know, you can long whatever your idea here, and then boom, it tries to make a new high, and exactly aligns with the previous high. So you have 1, 2, third high, you can start shorting again, understanding, hey, 66.84 zone is still gonna be my stop loss. This time, you know, it hits, caps down, and goes all the way down. Let's say you shorted from up here on this third try, you would have made bang, you know, profiting all the way down to almost the third level. You might probably would have stopped out by then, but 31, 32 level, and it's a massive gain. And you can see that how easy that was to spot. And it didn't take me no MACD, no RSI, no special TTM squeeze, nothing crazy. Guys, understand that a lot of you guys are thinking there's these special indicators going to tell you how to trade. No, 90% of the time it's going to be price action, volume, and this basic support resistance, and it's all the play of the double top, double bottom patterns are. And you might be thinking, oh, Antonio, that was just one, you know, it was just one, you just got lucky on that one. Well, let's stick to the daily time frame. Okay, so we make this local low here, right? And then whatever days go by, you keep this in mind. You know, have this run out here and there. You check on the NEO. First of all, let's see here, and we make a new low here. And look here, what happens here? About a week or so later, a week and a half so later, you make the same exact low here. Understanding, hey, now this is my double bottom. I should start longing. It's a reversal sign, right? So you see this we had a small uptrend here compared to this longer time downtrend. So you understand, hey, this double bottom, we're still in a longer time downtrend, but we did have a nice bounce. So this double bottom probably is going to be not enough to be the complete uptrend, right? So then you understand that you set your stop loss, where you should set it, which is down here. Understand then on this wick down, that would have been your stop loss, and you're looking for a profit target of, you know, just right around $42. $42, $42.50, you know, maybe if you want you can set it even up here, but you understand that you're not gonna know what this is gonna be yet. So you're risking this little again to make a much bigger more. So you're risking about what, 33 to 31 and a half, what is that, about $2 give or take, to make 42 to 33, which is about, you know, $8. So you can see the risk reward here is massive. You take this trade, great double bottom. If you get stopped out, hey, so be it, no big deal. You see, it works out, goes in your favor, bam. Then here you get rejected. You understand it. The rejection, you took profits, you stop out the rest. Boom. Another example. Not too long after this, we got this triple top. There, this worked. But now it doesn't even stop there, guys. Like, you can see how often you find this in trades, and NEO is just one example of this. But like, after this was done, now you close your trade, whatever you're waiting, and then you see this making a new low. But you understand this low is at the same level of this previous low. So now in the chart, you look at it and you're like, wait, that's a quite clear double bottom. But now that you see that here, when you want to take this trade, you're like, wait, but where do I set my stop loss, right? After you see this double bottom, you see this double bottom here, you're like, where do I set my stop loss? And that's where this price rejection comes in. I was talking to you guys about. You see how it wicks lower and actually goes a tiny little bit lower than this previous bottom. So your stop loss would have been the top of this candle, which would have been 30.71. So your stop loss would have been at the bottom of the wick, which would have been 30.71, risking very, very little right here. Or if you want to look back and look at the potential next area of support, you could have also looked through that terrible. But you could have also, let me use my horizontal line tool for this since it's too long to draw. you know, if you did want to be more risky and taking account, you know, this area of support back here, you could also, you know, set your stop loss at 28.45 if you wanted to, if you're looking for a potential gain. But you know, you would set your stop loss here, risking this much, and you know, you see that your next area of resistance was this previous area here when we took this previous double bottom here, which could cause a potential triple top if we get rejected. And as you can see here, we did get a bit of rejected. We did have a hard time, but then we broke through it. So you know, we broke through it, and you would have made massive gains. You know, all the way from about $30 all the way to almost 55 if you sold the top. So you can see how big of a risk reward we had. And another perfect example is that in this triple top here, if we zoom in a little bit, or potential triple top, because it did not happen. No, here there was a potential to create a triple top here. Why didn't this happen? You can see that if we zoomed in and we just focus on these candles, we had this candle, and then we had a strong, we didn't see a sell-off. As you guys can see, this double top that we saw before, boom, rejection, sell-off, here rejection, candle down, huge candle down. Here we saw candle down, and then small green fighting back up, and boom, breakout green. Saying that, you could have kind of foreseen that potentially this is going to be a failing trade if you did try to take the triple top pattern, right? The triple top pattern that we just talked about. But hey, Neo is just one example, and you can see on one example how many times you find this simple pattern. I call it a simple pattern because it is just understanding. All you can understand price action, support, resistance. It's a very simple pattern that I think every trader should be using. At least keep it in mind. It doesn't take massive work to look for this double bottom and double top patterns. You know, once you have a singular high or singular low, make sure you draw your support and resistance zone just so that you understand where it is and potentially look for these kind of patterns. A lot of different brokers, if you do have them, they all even offer an indicator that can show double top and double bottom zones, you know, if you want to look into that. But go out there, try out this pattern. Promise guys, this pattern is great. I use it all the time. It makes me a lot of money, and I love about this is that you use it on every single time frame. You guys saw me in the daily. You can easily use it on the 5 minute, 4 hours, even weekly, monthly time frame. You see this used all the time. Very simple, very easy to use, high win percentage, and you know, go out there, check it out, use it. You know, add some indicators to it if you want to. You know, look for other support zones, 50 EMA, 200 EMA, you know, whole number, things like that. Also do play an effect. So keep doing in mind and add this one to your tool bag. So let me know in the comments down below. What pattern should I cover next? What would you like to know about more about the stock market? Should I get more deep into options? I've been able to make a little section only about talking about options, things like the Greeks, you know, things about implied volatility and all things like that. So leave a comment, subscribe below, and I'll see you guys in the next video. Peace.